Hello traders, Mr. Pip here. I'd like to start by saying Merry Christmas to everyone and a Happy New Year. I wanted to make this video to cover exhaustion points and also turning points in general, because it is important for us to be able to not only foresee these things but position ourselves in a way that we can trade them for longer profits. I chose a 15-minute time period only because most of you trade the time-based charts, and although I don't, the information is the same. It is interpreted the same way, and the tools that we apply to make decisions are applied the same way. So whether you use Renko, whether you use range bars, tick charts, minute bars, it doesn't matter. Our process should be the same, and our measuring points should be the same. So I am starting off with just some basic information. We see that price had difficulty accepting any price action above this level, rejected it pretty nicely, and then price came up to retest it with a lot of strength and found an immediate and pretty strong rejection of that area. So we want to identify this area as an area of supply, and we'll do that by identifying a rectangle here to include this high spike. And we know right off the bat that price has challenges trading above this area. We also want to look on the downside of this and see that price has found support in these areas right here. So we want to identify this area as an area of demand that price likes to trade above this area here. I'll include some of these highs here. Now, as you see, these areas are pretty broad. You know, there's a lot of space here. We're talking, a little over 30 pips here, and we're talking, a little greater than 20 pips here. So that's a pretty broad area. So we'll see how we can make that, a little more precise, a little bit on the more narrow side. Nonetheless, for right now, we have to include this, we have to include this, and we'll see how we can refine these areas further, if we can even do that. So, pardon the commercial from Pandora, it'll end soon. So this is where we're at, okay? So now what we need to see is, we need to see where we're at from a structure standpoint. We see that we've made a new structure low here, and then we've made a new structure high, okay, from these points here. So the market is telling us right now, and it's telling us with strength, and the market intends to push higher. It intends to break these highs and trade above these highs. Okay, so what we're anticipating here is a higher low. The question is, where do we anticipate that higher low to be, and can we position ourselves in a place where we can take this trade into that new structure high? Okay, so for right now, we have to establish an area of confluence somewhere in this zone, in this rectangle here, so that we can position ourselves in a way that price action will come back. Now, our expectation overall is a fairly light pullback. We don't expect a pullback all the way down here into this area, That would be a little unlikely, since we have such a show of strength to the high side. So the very first thing we want to do is we want to draw our Fibonacci ratios from the low to the high of this main swing. I'm sure we can all agree that this high and this low constitutes a main swing. So we want to see how far back of a correction we get here, and where we are likely to take a long position. Now, where there are round numbers here, because they do play a psychological impact on where price goes. We see that we have a round number here, a big round number. So we're going to go ahead and identify that as well. And we see that price has pretty precisely acted as an area of support or resistance. So right off the bat, we can take our rectangle here and shrink it a little bit to include that, and say, okay, well, now we have a little bit of a better defined area. And then we see that we have here these lows, we have this area here. So now we can take this and we can define that area just a little bit more, make it a little bit smaller. So now we've redefined our, if I extend it this way, you'll see, know, we've pretty much found a smaller area that it's easier to work with. The 20 pip range, we're on a 15-minute chart. That's more than fair. On the top side, we're about 20 pips. That's about, you know, fair as well. We'd like to make it more accurate, but due to these spikes highs and this right here, that's about as best as you're going to get on that. But these are just zones, and we want to see how price behaves in these zones. So in moving price forward, what we would like to see is we would like to see weakness coming back down into this area so that we can position ourselves for a long trade. So I'm going to fatten our chart up a little bit so that we can see things a little clearly. And we see that in moving price forward, we see that price has found a low here. This is a corrective point here. Okay, so one of the things that we would like to take into account that, you know, it's once we get a new structure low. Right now we're on a retest here. Once we get a break below, close below, we see that as a swing. Okay, and here we get that break. Okay, so now we have to assume that in the short-term order flow, which is that's what this is, we expect to make a new structure low, which we have. Okay, we've made it off of a shallow pullback, so we can come to the conclusion that this price action is going to come, or has a good chance of coming, into our rectangle. Okay, and we use the short-term order flow to help us determine that. So one of the things that we're going to do is that we're going to draw an extension of this high and our low. I'm going to bring it back up to the top, and we're going to see that we have the 61.8 and we have the 138 and we have our rectangle. So now we have an area, okay, that's pretty good for an exhaustion point. And as you can see, now I am really getting down here and I am pinpointing a smaller and smaller area of confluence for us to be able to look for that long opportunity that we were looking for. Now, I told you that we wanted to see weakness coming down here because guess what? There's a round number here. Price could come down to test that number. Overall structure is here. Alright? Structure is here also. We didn't include that just because we have the confluence here, here, and we have to assume that. Now, where are we from a harmonic standpoint? From a harmonic standpoint, we have this high to about here. We have a very shallow pullback. Now we have price that extends beyond our area. Okay. Now, off of this much strength, this shows strength coming up to the side, and this apparent weakness to the downside, we can pretty much rule this out. It is unlikely the price will make it down here. Okay. So we're going to delete that line, and we're going to push on forward and move, advance price, and see how price behaves, and if it even makes it down into our area. We're not looking to take any trades up in this area. Why? Because that would be a low probability trade. We expect price to come down here. This is an expectation. Until that happens, there is no trade to take. We only want to be concerned if price reaches our expectation. Okay? Price has made a very weak new structure high, which means we're a weak. We should expect some a deeper pullback here. But look what's happening. We have weakness on the decline, and we're showing a sign of strength building on the high side. This is important to let you see that the bulls are looking to take price higher, that the bulls are motivated to buy in these levels. So we'll see if price can come back down. Okay, and we'll see that price is trickling down, showing what? Even greater weakness. Look at this. Look at this. Even greater weakness. This is good. This is what we want to see. And you know, we have to be patient in these areas. We have to be patient for price to come to us. We can't get too excited in letting price. So here's a little show of strength here. Now price is trying to make a better commitment to make it into our area of exhaustion. The 138, the 161. We do have a round number. We have the 618, which is the golden ratio. So my particular area of interest is right here. I see that price barely made that scratch. Price came back, made a pretty good new structure low. We expect a fairly weak pullback. We got that weak pullback right to structure. We see the price rejected this area, came down, tested it, rejected it. Okay, so now this is an opportunity for you to jump long once we get a bar by bar confirmation. Do we have that bar by bar confirmation? Not yet. We do see some commitment here. We do see the price comes down. Now we do get one, but this is now a little bit too far away for my taste. I will not get in here. This is retail buying at this point. We do have potential resistance up here. I do not have enough room, and I incur greater risk. So this is a trade that at the moment I would pass up on and see if price does come back down to retest my area here. We see that price continues to come down and test this area. Okay, shows a lot of weakness also on the incline and weakness on the decline. So right now we're in a period of consolidation. Okay, and now we see the price comes down with some strength, comes back down to retest this low, has a fair amount of rejection, and now I get a clear indication that the market does want to in fact push higher. So I would enter at the next bar open, okay, as price comes back up, now trades higher. Okay, I am testing these highs. Okay, so I would immediately expect what happened, long-term order flow right here. Okay, 61.8. I'm thinking possible ABCD to the high side. It conforms to the rules of engagement of the ABCD pattern, and now I feel very good about this trade breaking these highs and trading higher. Okay, I do want to manage this trade aggressively. Okay, at the very least, I will get to a break-even point somewhere between here and here. I do want to get to a break-even point. I am at a break-even right here, and I want to do that because if price is going to find some resistance, as we do have some structure here, it's going to find it right around this area. So price comes back down. So far has formed a higher low, comes back down, has taken me out on the break even. Okay, but guess what? I see a lot of weakness here in the decline. I see a price rejection. So if I am out, I do see price having difficulty making a new structure low. I do see some weakness here. I can now get in or around the same place. I have an opportunity to re-enter this trade here, as the market has shown me that its intention is to move higher, although I did a deeper than expected correction. Okay, overall I still made a higher low in the grand scheme of things, and I am looking for that ABCD pattern to the high side. The 60 at 1.8 held. My 138 that's over here held. We look across. All of these held. All of these lows held. So I feel pretty confident that I can re-enter this trade and take it to the high side. Okay. Now as price comes back down, trades a little bit lower, goes against me a little bit, I still feel okay. Why? Because I see a lot of weakness. I see no commitment on the bears to take price lower. I see the 61.8 holding. And at this point, I feel pretty confident that I have made a decent decision to get in long. I see a weak pullback here off of this little impulsive leg. I'm feeling pretty strong about my trade at this point, and I see momentum increasing on the bulls here. So now I know that I feel really good about taking this trade to the high side. Okay, one of the things that I want to look at is now I look at my correction, and I see that I see a correction that's deeper than expected, but I want it to hold here. I haven't gotten to a break-even point yet, and I see that price is still trickling down. I am not at a break-even point yet. I have not reached the 38.2 of this swing. So right now I'm about a little bit less than break even. I see price is increasing its a little bit of momentum to the downside, but what is it doing overall? Is it it really going anywhere? No, it's going sideways. And price has overall made, compared to this flow, a higher low. So you have to be aware of the longer term order flow and know where you're at. Yeah, you've made a lower high in the longer term order flow, but you've also made a higher low. So price is just drifting sideways. And the fact that you've made a higher low tells you that you should expect what? A new structural high. We should see price action close above this. Okay? When price starts moving, still drifting sideways. Okay? Price is still not closed below this. Now price shows some of that momentum to the upside, which is what we want to see. Okay, and in these areas, when price is just drifting sideways, you just have to be patient. We have to be patient, and we have to be aware of overall, in the grand scheme of things, what's happening and who's in control of this market, despite what the short-term order flow tells us. In the long-term order flow, we know that the bulls are in control of this market because we haven't made a new structure low below this point. We haven't. And that overall, it's a higher low. And we see a lot of weakness on the bears here because they're not really driving price lower. They are in the short-term order flow, but in the longer-term order flow, they're not really going anywhere. Okay? So, we are starting to see price continue to try to make new structure low, and we have not been able to see that. Now we start to see the bulls take price higher and really commit to buying this market. Okay? Now, this trade went against me. If I would have taken this trade, this is where I would have entered. Price went against me price went against me, what's about 38, 39, about 10, 11 pips, not bad. Okay, now price is in an area where I'm at a break-even point. Again, see that? Price touched that area, I'm at a break-even point. Okay, and if I wasn't at a break-even point before, I definitely am now. So now I'm at a break-even point. I have a risk-free trade. And what is my expectation? Where is my profit taking? Where am I looking to go with this trade? Okay, I know that this is an area of resistance for me. So one of the things that I want to assess is, but I'm also looking long-term. Long-term, I'm looking for a ABCD to the high side. My lowest point was here. So that's way up there. Am I going to get there? I don't know. I have to see momentum building to the upside. I need to see how price behaves in this area. Let's extend it across so that we know. 56. Not sure we're 56, same place. Okay, so now we're at 56 from the same area. We want to see how price approaches this area to see if it's going to hold, to see if we should take profit early. Okay, there are some things that we can do immediately from a extension standpoint to look at what possible exhaustion points we have, and if there is confluence at these zones, we take our extensions and we draw an extension of this point right here. Main swings. Remember, we're dealing with main swings. Okay, and we're going to take another extension from this low to this high and back down. Okay, and we know that if price is going to break this high, and if we get trade above this high, we make a new structural high, we're likely to achieve at the very least a 127. Okay, now remember, our entry is here. I'll extend this line further across this way. This was our entry. Okay, price worked against us a little bit, went in our favor, went against us a little bit. Our stop loss had to be below structure. I would have put it below the round number just in case, but with this much weakness, we knew that the round number was not going to be tested. So let's just say worst case scenario, we put our stop loss right around here, below, about 5 pips or so, 10 pips below the round number. Okay, that is the safest place to put it. So now we're expecting price moving up to the high side. We're looking at the short-term order flow to help us see with what strength or weakness price gets here to see if we can expect this area to hold or to fail. Now, all areas of supply and demand are expected to hold unless what? They are approached with a lot of strength. Price approaches these areas with a lot of strength, they are expected to fail. Okay, so now we can come back in and see what price does. We've already got a measurement of this main swing and we got a measurement of this main swing. Okay, so we can move this down, see what that looks like up above. Okay, and we see that we have a round number up here. Okay, 50 is a minor round number. We see that we have a 127 extension. We see that we have a 161 and a 138. Those are the that is the confluence of these two. So we see that we have a possible target area, price reversal zone, that's around here. Now that's fairly big, and right now that is the best we have. Okay, we know that price should, if it gets past this area, should reach this area and stall. Let's see what happens. Okay, now we see that price moves up, comes down. Looks like price acceleration, right? Looks like a very shallow pullback, right? Which should give us what? Price acceleration again, right? Now we see price acceleration into this area. Look at the momentum so far between here and so far what we have here. A lot steeper, right? Steeper, right? So it is fair to say that this area should fail. Okay? And we can go ahead and we can say, okay, well, where are we in the grand scheme of things? Are we anywhere close to these areas yet? No. But should we get price come up into this area before we have a correction? So we could, just to see how price reacts to that area, we can look at an extension of this would be what? A 161 more or less. So we should get price have some sort of reaction to this area. So price comes up, boom, hits that area, hits it with a lot of strength, right? What do we expect? We expect price to keep going higher, right? Why? Because price is accelerating. Price hit this area, boom, look at that. It hit this major acceleration here, came back up, blew through this round number with a lot of strength, came back up here, tested this, didn't quite get to this high here, and we see that a little bit of rejection. Okay, we are into our exhaustion area, our rectangle, our price reversal zone. We see that we had price pull back away from this area a little bit. It missed so far our target harmonically, 77 to 85, so it's about 8 pips away from our projection point. That's pretty damn accurate. So now we have a decision to make. Do we close here? Do we close our trade here and take profit? Or is price going to continue? Well, with this price acceleration, it will lead you to believe that price is going to what? Continue, right? So we need a little more information. Let's see what the next candle tells us. So we take this candle here. At the very least, you should have locked in some profit. This was our entry point. There's no sense in letting a lot of this get to, there's a big round number here. Okay, so at the very least, what you want to do, we'll put another line here. Okay, we want to make sure that we have our stop now got moved to right below this structure here, just to keep it safe, right? No sense in giving a whole lot of money back to the market. So now we want to see what the next candle tells us, and our next candle tells us a lot. Our next candle tells us that there is no intention for the bulls to take price any higher. They should have been able to close higher after this strength. They should have been able to not allow the bears to come back and take away half of this candle and close at the low, at the very low of the candle. So at this point, I will close this trade and get out. I would be out of this trade at this point, right here. This is how I manage my trades. This is how I aggressively pursue my trades to make sure I am not giving back any more than I absolutely have to. Okay? At this point, I have seen enough from the bears and from the bulls to make an educated decision that my target reversal zone has been penetrated and has been rejected. Price did not like that. I approached it with strength and I rejected it with an equal amount of strength. That should not have happened. Pardon me. So at this point, I'm out of this trade. So what did I take on this trade? In this trade, we entered here, we got taken out, then we re-entered. So this was my entry point. So let's grab our ruler. Okay, I want to go from here to here. We're talking 201 pips. Okay, and we risked. Our risk.
You can get off to a flying start
was
or a running one. You can start ahead of the curve or behind the A-ball on the right foot
48
or
pips.
the wrong one.
At worst, that's if you wanted to be extremely safe.
Right, especially
okay,
when buying a car.
so
a good start leads to a
you can see that you had a 5 to 1, 4 to 1 risk reward ratio almost. That is an amazing risk reward. Now, did you have a case here?
That's how you start.
Okay,
CarMax.
to get out earlier and get in on a short? Well, to answer that question is we have to refer to a lower time frame to see what's going on the more detailed scale to help us determine what's going on. Is there a definite sign of exhaustion point there? Is there an out, and is there an in for a counter trend reversal? So we're going to drop down to a 5-minute chart. Okay, and we see that what we see here is price come back, exhaust. We see price come down here. We do see price attempt to trade higher and unable to and hold off. So at this point, we could have exited here because we had more detailed information to look at. That's where the lower time frames help you out. So yes, I could have potentially exited this trade here or even here. Why? Because there was enough information there for me to say, well, there is no way that price is going to get up here. Now, is there a short here? Not necessarily. If you want to be really aggressive and take this trade, I would say yes, go ahead and do so. Okay, but I would wait for price to come back and see if I get a lower high. Okay, my expectation off of this is a shallow pullback. Okay, and a new structure high. Because of that, I would wait. Okay, and you can take a Fibonacci ratio from this low to this high and see that price found support here at the 50 but never got past this part. It made a significantly lower high. Okay, so once price produced that lower high and I see the order flow changing from buying to selling again, this tells me that I am indeed looking at a lower high, and I do expect a new structural low from this point and a possible market reversal. And I could take this trade and enter somewhere here or here at the worst case scenario. I mean, I'm very aggressive on my entry, so I enter here. My risk is, worst case scenario here, safest scenario up here. So my expectation now is for price to continue to make new structure lows and lower highs. So I make a new structure low with strength, right? So I expect a shallow pullback to structure. Shallow pullback, you see the pullback happens with weakness to structure, okay? So now I am, still in this trade to the downside. I do expect a new structure low. I get an even stronger new structure low, projection increasing, momentum, okay? But I do see significant projection where I expect a what? Shallow pullback. I got a shallow pullback to the round number, to here. So now I see the round number held should act as what? Resistance, right? So now I know I expect a new structure low, and we keep playing this game over and over again, and there is no reason to get out of this trade. By now I am at break-even, risk-free trade, and I want to monitor this trade very aggressively on the downside. This is where we are. This is the live market. So we would have had, possible between 200 and 216 pips on the way up, and a possible entry here. Current price action is somewhere in here. Another 67 pips on the way down. Okay. You also want to draw a ratio from here to here. See where you're testing. You're just below the 61.8 here. Price still has an inclination that it wants to drop lower, so there is no need to get out of this trade. I hope you've learned how to use exhaustions, how to use harmonics to help you determine not only profit taking but reversal areas, and how to use these tools to help you not only trade in the direction of the order flow, but also how to enter counter trend. Now, counter trend does bring on greater risk. You are going against the strength of the market, but you have to ask yourself, is there enough room, okay, to make or to get at the very least to a break-even point? And if the answer is yes, and the risk-reward makes sense in the trade, why not? Okay? So I'm sure you'll have questions. Post them. We can make other videos. It's not a problem. And I hope you enjoyed another one of these videos. I hope it was very informative. And good luck and good trading.